So when I was a sell-side analyst, I used to do the transport sector. And the transport sector is a very odd sector in the UK and Europe because it's got a very wide variety of stocks. You've got everything from airports to airlines, from ports to shipping companies. You've got trucking companies and warehousing. And the quality of these businesses vary very widely. It's probably the most unusual sector in the stock market, I would argue, in many respects, actually, because it's also a leading indicator of the economy. But it was very clear to me that the stocks were polarized in two very different camps. You had some very high quality stocks in the form of infrastructure companies like ports and airports, and you had some very low quality stocks in the form of airlines. And the whole issue of quality was very, very obvious. If you were a UK investor, you owned AB Ports and BAA. They were high quality businesses. They made their investors a lot of money over the years. They had asset backing. They were effective monopolies, certainly locally. There was almost zero chance of sales or profits falling. It's a long time ago now, but I can't remember ever seeing turnover go down, certainly in the core businesses, even in the middle of a recession. And they had pretty weak management overall, I would say. But the point was, as Buffett used to say, you want to invest in a business which is so strong that you don't need good people to run them. And certainly these businesses didn't. But they were very, very high quality businesses. And I used to encourage my clients to have their core holdings in these businesses. And then at the other end, there were low quality stocks. Airlines like British Airways had no control over its revenues, very low margins, highly volatile profit streams. The trucking companies basically are the same. I mean, I know that a lot of people in America like UPS and hold it, but it's not a very good business in my view. But if you look at the airlines, there was always a time to buy the airlines. And if you got this strategy right, you made a mint. Because what I used to advocate was we used to own the airports and ports throughout. We didn't even bother selling them at the bottom of the bear market because they were such good businesses. You didn't want to sell them because you didn't know when you could get it back in. There were a few occasions where I was a seller of AB Ports and BA, but it was really remarkably few occasions. But where I used to get really opportunistic was when you were coming out of a downturn, coming out of a bear market. Stocks like British Airways used to have collapsed and you could make huge amounts of money. It was really a fantastic sector to play in. And in between, you had a whole bunch of different stocks, bus companies. They had fairly consistent revenue streams. They had limited competitions. Sometimes they were a bit indebted. They often had rail franchises, which had limited lives. And the management, well, the quality of the management varied very dramatically between the different operators. But they were, reasonable companies, not bad quality companies by and large. A couple of them were lower quality than others. And you could make good money in them from time to time. But that was my strategy. It had a very simple strategy: own the high quality ones and opportunistically buy the lower quality ones. And that worked.